Everyone, RC Peck here. Wow, do we have a lot to talk about this week. We have to talk about gold and we have to talk about Bitcoin, those two specifically. And the backdrop is rates. What is going on with rates? CPI just hit 7.5%. Inflation hit 7.5% here in the US. Is it really transitory? Is it here to stay? What are commodities saying about it? What is the stock market saying about it? What parts of the stock market actually like this information? And what parts are freaking out? And probably most importantly is, what are people over the age of 50 doing? And I'm saying this because they control and own the majority of the wealth in the stock market. So whether you're 50, 60, 70, or 30, you have to understand what they're doing. Stick around, we're going to cover those things and so much more, a couple individual stocks too. All right, let's get to it. Okay, let's get over to the price charts. Okay, so we need to talk about interest rates first, and that's where I'm going to start. So if I go over to the Chicago Mercantile Exchange, the CMEgroup.com, and we just kind of look at what the market is expecting. So there is a Fed meeting coming up in March, and the market right now is expecting, basically there's a 100% chance rates are going up in March. Now that's not a big deal because we've known about it. 36%, right, of people believe in March rates are going to go somewhere between 0.25% to 0.5%. 2/3, let's call it 1/3, 2/3. 2/3 of the market believe we're actually going to get a 50 to 75 basis points. So basically the federal funds rate right now is at 0. 2/3 of the market believes it's going to get somewhere between 0.5 or 0.5% to 0.75%. 1/3 believes it's going to get anywhere between 1/4 and 1/2. So rates are going up. The market is having to digest this. So let's look at what the market is doing. We're looking at just SPY here. You could pull in many different types of S&P 500 symbols. I'm just bringing SPY. So look, it's digesting this information. It is figuring it out. If you look at the screen, basically the S&P is just kind of, let's just call it SPY, is bouncing between 430 on the low end and 480 on the top end. So we're in a sideways market right now. And what the market is having to decipher is literally, what is the deal with interest rates? And one thing I noticed yesterday that was really interesting is utilities were a place that basically were holding up, and it actually fell much harder yesterday. I'm recording this when the market is open on Friday. So utilities got hit a little bit, which was surprising. So that is definitely people over the age of 50, men and women over the age of 50. They got a tinge more concerned. But right now, the market literally is digesting this information. And there's many different ways to look at the market. This is the equal weighted S&P 500 fund. It definitely hasn't had the performance over the last, say, 4 months, but it is definitely in a sidewaysness. You have kind of the small cap universe, IJR, and that is, wait for it, just going sideways. So we have a lot of sideways going on. You look at the NASDAQ 100, let's bring that one up too. That is going sideways. Now that range looks a little bit more, but that is definitely going sideways. There's more volatility with that. This is still a correction. This is not a crash. And the reason I keep saying that is because money is not moving into the bond market. Money is not moving into the US bond market. It's not moving into the German bond market. It's not moving into the Japanese bond market. That's where people panic into. And that is not happening right now. Also, too, money is not panicking into the US dollar. Yes, the US dollar has gone up from June of last year to where it is today, up about 6%. But I've talked about this before. If you zoom out and look at what's going on with the US dollar, it is just in one huge sideways nothing messiness. And until it breaks out of that, there's really nothing going on with the US dollar. No one's panicking into it. No one's panicking out of it. People are just, right now, people are just watching what's going on. Let's go back to just having the SPY. People are just watching what's going on and figuring out. Right now, we are in a correction. I don't see this as a pre-crash. It is a market is correcting very much like if you remember 2015 and 2016. That was the last time the Fed started raising rates, and the market went sideways for about 8 to 12 months. It was scary. The market went up and down about 15%. So I believe that's what's going on right now. The market is just managing this new information coming in. It's not going higher. It is digesting. The one thing I will say is the market is going higher when it comes to commodities. So whether you look at commodities through like DBC, it's moving higher, or GSG, it's moving higher. Commodities are moving higher. Orange juice, here's right. Coffee right here is moving higher. Corn is moving higher. Agriculture is moving higher. Base metals, wait for it, base metals are moving higher. What's not moving higher is gold. So I said at the beginning, I'll talk about gold. So here's what's interesting about gold. If you look at the screen, commodity prices over the last year, silver and gold are at the very bottom of this, right? Look what is moving a lot: coffee, gasoline, heating oil, aluminum, crude oil, Brent crude oil, cotton. So of the top 6, let's see, coffee is at the top. Then we have energy, metal, aluminum, energy, cotton, energy. So everything that's really moving, it's around energy, which is obviously a commodity. So if you look at the bottom, what's not moving is gold. Gold is down 1%, silver is down 14%. So no one's moving into gold. No one's panicking into gold. Gold, when priced in the US dollar, is staying above $1,800. Let me just bring up gold here so you can see it here. Is staying above 1,800. It may be stabilizing. It very well could be stabilizing. But really, what we know is people are not panicking out of gold, but not a lot of money is moving into gold right now. It's just kind of stable, which I get is positive considering the market is not stable right now. It's actually falling. So on a relative basis, gold is definitely stabilizing. Okay, I mentioned Bitcoin, and I want to mention it right now because if you saw in the news that there was a couple who stole, I'm going to go from memory, in 2016, about $70 million of Bitcoin. That increased to about 4.5 billion. The screen here shows the recovered thumbnail, which has about $3.6 billion worth of Bitcoin. They can trace all of that, right, with the public ledger. They can see their names where they tried to get rid of it. What I'm getting the most from this is it's very hard to launder money with Bitcoin because there's a trail. What's also interesting is that little thumb drive right there. You can cross borders with that. It used to be you put gold on you to cross borders, but now the new kind of store of wealth has become Bitcoin for anyone under the age of 50. And I believe it's slowly working into the over the age of 50 men and women investing. Right now, I said, do you have a plan or do you have a portfolio? What I mean by that is just owning gold is like a portfolio, or just being in an 80-20 is a portfolio. A plan is you adjust to what's going on. Hey, gold stopped going up in August of 2020. Probably don't need to have your 10% in that, right? So you want to have more of a plan than a portfolio. The sad thing is most people probably just have a portfolio if they're with a big box advisor. Okay, so I talked about Bitcoin and gold. I want to talk about those two together. I talked about the market digesting rates. International is still in a downtrend. Oh, this is all world ex-US. It's still in a downtrend. Slightly doing better than the US on a year to date, but directionally is still wrong. Emerging market directionally is still not good. Frontier markets directionally are still falling. So even though the US is down more year to date, the US, I'll just put in VTI because those are all the US stocks, it is still the strongest out of all of them. And the US does have the highest inflation rate right now. So I think the big news from this week's recap is market digesting rates. They're going up. Commodities were the best asset class last year. They're the best asset class this year. You can buy commodities by owning commodities. You can buy commodities by owning the companies, like the equities behind the commodities. Energy did well last year. Energy is continuing to do well this year. Whew, that's a lot. That's a lot of information coming to you. So to wrap it up, we're still in a correction. The market is digesting a lot of information. Gold hasn't done anything yet. It's still going sideways. Relatively speaking, it is more stable right now than the market. But we are in a digestion phase right now, like 2015, 2016, when the Fed started increasing rates again. So there are some good things happening, and there's some things that are hurting people right now. You really want to have a plan over a portfolio. Thanks everyone for being in my world. I do appreciate you. Please let me know where I got it right, where I got it wrong. Leave a comment. Tell me what you think I should cover next time. I did mention I may get to some individual stocks. I'm just running out of time today. I will get to it. If there's some stocks you're interested in me looking at, please let me know. There's some crazy things going on with some major bold-faced named profitable stocks. So this correction is not without its volatility. Okay, that's it. I look forward to seeing you on the next video. And if you like this one, you'll love our other ones. Okay, take care.